Alright, so the rain has officially turned into ice as crypto winter is officially in full swing and has a grip over the whole crypto markets. As you can see through the storm, the ice queen herself, Jerome Powell, is commanding the winds, and we're going to get into the forecast for what that's going to look like here in just a moment. But first, let's just take a moment to hit that like button for our hopes and dreams because I think they might have just died. Anyway, let's see what the Fed is up to. As you know, the Fed recently raised rates by 75 basis points, and it looks like we're going to be looking forward to what they're going to be doing in their next coming up meetings to see what's actually going to be happening with the market and if we have more downside to go. According to this article right here by Reuters, you can see that people are expecting them to do another 75 basis point hike in July, and then another 50 basis point hike in September, and probably 25 basis point hikes after that. Inflation has been continuing to run out of control, and this week we are going to get some more inflation readings, so we're going to find out what the Fed's outlook might actually be, and we're probably going to be looking forward to the 75 basis point hike to get priced into the market as we near closer to that meeting. The second quarter is ending right now, and that means that we're going to be getting the GDP readings for this past quarter, and we're going to find out if we're officially in a recession by the end of July. A lot of people think that if we see an end to the Russia and Ukraine situation, then we could be seeing an end to inflation, but I don't think that's going to be the case because we're actually going to be seeing a recession anyway. We were starting to see inflation be very high before the invasion actually happened, and now it's starting to slow down naturally because that's what happens whenever you get really high oil and gas prices. Recently, the Fed, as you can see in this article by Yahoo Finance, did mention that inflation was certainly high before Russia's Ukraine invasion, and that means that he basically contradicted Biden, as it also says right there. And really the reason that we're seeing all of this inflation is because of obviously all of the trillions of dollars that we've been spending over the past couple of years. Luckily though, as you can see by this article on Yahoo Finance here, it says that oil drops as recession worries rattle commodity markets, and we have been seeing commodities start to have a little bit of a downturn here, and that usually does mean that we're starting to see demand destruction. That's the first sign that a recession is on the way, and whenever we get that second quarter of GDP that comes out at the end of next month, then we're really going to know what is actually going on. You might think that this means that the Fed is going to do a U-turn and they're going to start lowering those rates, but I actually think that they're not going to do that, and they're going to be significantly behind the curve because they have to get inflation under control under any circumstances, and just seeing it start to come down a little bit isn't going to be enough for them. Until they start to see it come under about 5%, I think they're going to continue trying to raise those rates, and they are probably going to cause a pretty severe recession because they are going to be behind the curve, as I said. Oil dropping is a really good sign, but it does mean that we're going to be going into a recession probably. It's not a good sign that we're going into better times, it just is a good sign that we're starting to get some of this stuff out of the way. Hopefully this means that oil and gas prices are actually going to start coming down here soon. And then as people start to have less money, then probably prices of food and stuff is going to start coming down, and rent as well. And then by the time all of that starts happening, we can start to probably invest in the market again because it's probably going to take a beating in the meantime. Right here we have the rates for the federal fund rate over the past 60-something years. And as you can see, since the 80s, we have been in this downtrend right here, and we're getting pretty squeezed into this corner, as you can see. The Fed has the rates at about this trend line here, and if we do go above it, then we might have a little bit more panic in the market. But if they don't actually get it above there, then whenever we do see this recession, they're not going to have any leverage so that they can lower rates and stimulate the economy, and then we're going to have a deflationary spiral and possibly another depression. So that's the real reason why they're actually trying to get these raised rates, and I don't think that it actually has that much to do with inflation because everybody's been making mad profits and they don't want that to stop. The Fed knows that if we do overheat this economy, then we're going to go into a recession inevitably, eventually, and they're going to have those raised rates a little bit so that they can have some leverage and stimulate the economy again. If they don't, then they're not going to have any tools to get rid of the recession or to stop it, and it probably could get really bad. And obviously, if you can see that people don't trust the Fed right now, just wait until nobody has a job and they can't afford to get food. Then people will really lose faith in the institution and they're going to be seeing some tough times. Unfortunately, this means that they probably are going to over-tighten, and it's probably going to make the recession a little bit worse, and that does mean that we're probably going to be continuing to see some downturn, especially if inflation does start to come down and then they continue to do hikes. Everybody's expecting for inflation to kind of level off and then for them to reverse action and to start stimulating again, but whenever they don't do that, people are not going to know what to expect anymore, and that's really what the market fears. The market fears uncertainty, and the more uncertainty we have, the more downward momentum we're going to be seeing. The Fed is not going to hesitate to put us into a recession to try to bring down inflation, but if the states and the federal government don't stop spending money like total idiots, then we're not going to see inflation come down anyway, and as the economy does slow down and the Fed continues hiking, we're going to be seeing a severe stagflationary environment, and this right here is the exact reason. This article by CBS says 23 million Californians are supposed to get up to $1,050 for inflation relief checks. These are stimulus checks for inflation. That's not what we need. We don't need to stimulate this inflation. We need for demand to come down, and that requires demand destruction. The only way that's going to happen is for people to not be able to afford these higher prices, and then for people to have excess product that they can't get rid of, and then they have to bring the prices down. That's how we get inflation to come down, and that is what causes a recession. But if we don't let the consumers get to that point, and we keep funding their spending sprees, then we're going to continue seeing prices go higher, and California is going to drag down the entire country because we're not going to get this inflation under control. Hyperinflation is something that we really need to avoid at all costs, and this kind of stuff is not helping in any kind of way. All this is going to do is drive inflation higher, and the prices are going to continue rising. This is just going to push off the recession, and it's going to make it worse whenever it actually does come to fruition. But I guess you guys enjoy all of your stimulus out there in California. It's time for some Bitcoin charts. Alright, over here we've got Bitcoin sitting at about $20,857 at the time of recording. As you can see, we have hopefully got some support here at about $20,000, and a lot of people are thinking that this is the bottom of the market and we're going to be going back to the upside again. As you can see though, we do have on the weekly chart the RSI lower than it's really ever been since the beginning of this chart here. And that means that whenever we do have a rebound, hopefully it's going to be significant and we can go shooting back to the upside. Unfortunately though, like I keep saying in all of my videos, really we're gonna really need to get this inflation under control before that can start to happen, and the Fed is going to have to start pivoting before people feel really confident just yeeting all of their money back into the markets again. With the RSI being so oversold here, that means that we could be having a little bit of a rebound here. I don't think that we're going to be going up like really anything above $30,000 probably without hitting some significant resistance, because a lot of people have been seeing a lot of pain recently, and whenever we do start to get a little bit more gains, people are going to take that opportunity to kind of exit the market, you know? On the daily chart, the RSI is also here pretty close to the oversold territory, and if we do get a significant break above this resistance at about $21,000, then I think that we could have a significant relief here, but we're going to have some resistance here at this previous support at around $29,000, and I think that we might get rejected there, coming back down to retest this blue line that we've been bouncing off of a few times in the past. Unfortunately, that does mean that we could be coming back down to about $10,000 or $15,000, where a lot of people have been predicting. As you can see, this is really where this downtrend is headed to. If we do come back and retest it, that's what it'll look like. And there's this really big indicator that I've been neglecting to tell you guys. I've been talking about it in my Discord a lot, but honestly I've been in kind of denial, and I'm going to share that with you now. It's kind of scary, but just stick with me and hopefully it won't come true. First, I'm going to show you what a bull flag and a bear flag is. A bull flag and a bear flag are parallel, basically retracements in the middle of a trend. And what you do is you take the height of the flagpole here, which is from the breakout point to where it had some rejection, to where it had some resistance and came down to consolidate within this parallel range. You take the flagpole and then you extend it from the breakout point, and as you can see back here, I'll zoom in a little bit, this definitely perfectly hit this price target, and that's what it tends to do. Here we have another example from back in August of 2021, and as you can see, here is the flagpole, and if I just bring it to the breakout point here, you can see that it pretty much perfectly hit this target as well. Unfortunately, these do work in the opposite direction and call them a bear flag, obviously. And here I believe we have one that I haven't been seeing a lot of people talk about, and possibly because it is very scary. If you take this flagpole and you extend it from the breakout point from the rejection underneath this upward trending support line, you can see that the breakout target for this, if I try to move it up here a little bit and not give you a full-on heart attack, you can see that our breakout target is roughly about $8,000 to $7,000. I've heard a couple people kind of whispering about this on other crypto channels, but really nobody seems to want to be talking about it. A lot of people have been saying that we could see a bottom around $15,000 to $10,000, but I really think that if it dipped below $10,000, enough people would be panicking and get scared out of the market that we could finally see a bottom, and it would be significant enough that it could actually start going up from there. I'm not saying that it's going to bounce there and just go straight up from there. We're probably going to trade sideways for a long time until people regain confidence and start re-entering the market. But unfortunately, these do usually play out, and I think that it could possibly come back down to that level. At that point, that's going to be what they call real capitulation, which is where people actually give up on the market and they think it's all going to be going to zero. And while everybody is panicking, it's going to be very hard to throw money into what seems like a burning pit. But that is going to be representative of the best opportunity that you're probably ever going to see to change your life with cryptocurrency. It's going to be very hard though, because people are going to be ridiculing you if you say that you're buying crypto. They're going to make fun of you, and it's just going to seem like actually it's not a good idea. But that is whenever the best opportunities are going to be presenting themselves, and I'm going to be taking full advantage if we do get down to that point. Honestly, I hope it doesn't go back down to that level, because that's more than another 50% drop. But as you can see, really, if I zoom out, that doesn't look like anything in the grand scheme of things, because we've already dropped this far, and all we have to do is go this little bit of a distance here. I'm not saying that this is necessarily going to be what happens, because I'm not a technical analyst expert or anything like that. I'm just a guy who studies all of this stuff as much as I can. And at this point, I've been ignoring this indication for so long that I can't do it anymore, and I just had to let you guys know. I'm not selling anything, and I'm definitely going to be trying to buy as much as I can at any point that I see that I have a little bit of extra money, because I think that even if we do go down to that point, we're definitely closer to the bottom than we are to the top. And even if we do go, hopefully bouncing up from this point right here, this is definitely going to be really one of the best opportunities, and probably the best opportunity that we're ever going to see again in cryptocurrency. Because whenever this does gain mainstream adoption, I don't think there's going to be any looking back. Of course, we're going to be seeing bear markets and recessions in the future, but this might be the deepest dip that we see, because like I have said in the past, Bitcoin and cryptocurrency technology has actually never been through a real recession, and this could be the most brutal bear market that we see for a long time. I know that's scary, and I don't want to scare you guys. I just hope that you appreciate the honesty. Anyway, let's get on to what we have looking forward to this week ahead. This week on Thursday, June 30th, we have Cpe Inflation coming in, and that's core inflation, which is the Fed's metric basically, and that's what they look to see if inflation's actually starting to go down, or at least that's what they said in their recent meetings. Like I said though, if this does come in lower than expected, then we could be seeing people expect the Fed to do a U-turn, and whenever they don't, we could definitely see some more downturn in the market. But if this does come in higher than expected, I don't really know. Unless it's a really big shocking number, I don't think it's going to have that much of a horrible effect, because we've been getting really high inflation readings up until this point, and I think that people are just kind of expecting that now. But anyway, this is a really important date coming up, and I think that we need to look forward to it, because it is going to tell us what the Fed is going to be basically looking at to see if inflation is going to come down, and that's the best hint that we can get to see what they're going to be doing with their meetings coming forward and what kind of rate hikes they're going to do. That's really all I've got for you guys this week. Thank you guys so much for watching. California, get it together. I hope you have a wonderful day, and don't forget to hit that like button. I'll see you next time. Bye.